results, revenue at 3.17 billion euros, up 4.2% year over year.
Reporting third quarter sales up 4.8%. Franklin Golf Romeo.
And Fed policy will be driven by the pace of the data. So policy will remain accommodative.
Futures off sessions low, still down about 1% on the day for a little more than 4 pennies.
Hi, this is Andrew Falde. I'm going to show you a quick look here at the S&P 500 chart, and I'm specifically looking at a couple of indicators here, and one is the squeeze indicator, and this is the basis of a lot of the decisions I make for directional and proactive management of neutral positions is based on this lower indicator here called the squeeze. And I also recreated it in TradeStation called the T indicator, which is a simplified version. But this one here, I'm going to go ahead and show it the way it is to show the smoothness of the indicator and the last few cycles, and how we don't get a lot of false signals with this indicator. It's very good at showing us loss of momentum and changes in momentum that may not be very obvious when they're happening, but the indicator does a great job of catching cycles. And the components of the squeeze indicator include a price channel and linear regression and an exponential average all together. So by including all of those things in its calculation, it is both a trend-oriented signal and a range-bound or range-oriented signal. So it's very good at navigating a range, having different types of changes in signals based on where we are within the overall 20-day or 21-day range, and also catching those turns from those upper and lower ends of that range. So if you're interested in learning more about that, you can send me an email afterwards or sign up for the systems list, and I'll give more updates on that in the future as far as the details of it. But for now, that was just a quick explanation of what's going on there. And then, so you can see in this last couple of cycles here, where when the market was coming up in this first turn, major turn down, and we can see here when there's red dots, that is the actual squeeze component of the indicator, and that squeeze component means the market is coiling up and likely to break, and when it turns from red to green or blue or cyan or whatever color you would have on your settings, that means the market is picking up speed again, and that calculation is done by looking at standard deviations versus average true range. And a standard deviation is measuring the actual close-to-close move. That's how the standard deviation is calculated. Those are the data points being used, and the average true range actually uses the highest and lowest points. So that average true range can cover a wider area, but typically that amount doesn't change as often by as much of an amount. And the standard deviation, where we can move all over the place, but if we start ending up closer to where we started at the end of each day or from close to close, then that is kind of that consolidating period where we may move throughout the day, but if we end up keep coming back to the same point, that's that indecision consolidation period of time, and eventually we hit the break, which is indicated here with the dots turning into cyan, green or blue or whatever you want to call this color. And so we have the consolidation where market moves, and then eventually the closes start getting closer and closer to each other. So we end up in that red consolidation period, and then we turn into the blue color, and that's where the closes are starting to get farther apart. And that's a measurement of comparing standard deviation from close to close versus the overall range of the market. And we see that led two things. Led to a continuation of that, where the market is trending and moving, and also we have it as the trend component of the indicator has us looking to the downside. So here, when it just feels like we're kind of stuck in a range, and dojis or whatever kind of other analysis you can do in the short term, the big picture is showing that movement turned into consolidation, turned into movement, and that new movement happened with a downward trend. and that is what followed through to the downside. Now you can see there's another indicator, which I won't get into, where the actual bars change colors from red to blue. We can see the squeeze indicator, though, recognized right here this day as being the bottom. Now you don't know that until the next day when it starts showing yellows. So here we have the yellow, which means we're kind of in that accumulation mode. If you're thinking about market cycles in any type of market, indexes, individual stocks, equities, debt, doesn't matter. Markets move in cycles. And so this cycle is showing that stage 1 cycle, which is yellow on this indicator, is that accumulation or new buying. So when the market is dropped and the market is not dropping as much anymore, that's that buying. And it's this dark blue color over here. When the market has risen, this is distribution. So here we have that the downward momentum's ending. We call it accumulation. And that accumulation, in a very smooth way, leads into a stage 2. This is stage 1. Stage 2 is markup, when the prices can actually accelerate. So you have two things. You have the consolidation leading to a trend. The trend, we're getting to the lower end of the range and turning into a new consolidation. I'm sorry, a new accumulation combined with an not consolidating market, so a trending market or a trendy market, then that leads us to going to a new high. And so all of this comes down, it's a nice little history lesson. You say, well, what does it mean now? I've seen this pattern unfold many, many times. You go back in time and you look. I've written algorithms to go back and backtest multiple markets. The weekly is particularly valuable in following, so I always follow the weekly and the daily. I don't get too close into looking at the intraday. However, there is some opportunities there for getting consolidations within the context of the daily and weekly trends. But weekly is remarkably consistent as far as, working in many, many types of market conditions, and then you pile on and you layer in a daily signal. It's very interesting and very valuable tool that I like to use. Now, what's the actual application? If you are into individual trends, individual momentum, looking at strong stocks or industries that are relatively strong, that have a good outlook, then you would be looking for a broad market to also be showing current strength. And that current strength, especially when it's come from a pullback, and you start to see that pullback end, that's when you go look for those, what should be strong, what should be continuing, what should be industries that you like and individual companies that you like for any fundamental reasons or relative strength reasons. And you can be watching those along the way, and if you see those start to take the same shape and they've pulled back less and they're showing new strength, and maybe they had a new signal before the broad market, but when you start getting those things adding up and working together, that's when you can start getting into things that move 4 and 5% when the market only moves 1 or 2%. So that's one of the ideas. That's if you're into individual industries, trends, markets, and stocks. If you're looking at market neutral, complex options positions, then the application becomes where you're proactively taking measures to defend and adjust and balance and rebalance your profiles and portfolios. So in that case, if you start seeing that bullish accumulation, which is that yellow signal, and that's happening within a trendy market, which is showing the blue cyan colored dots. If you're having all of those things coming together, that's the time where if you were adjusting to the downside before and you felt like you were chasing it to the downside, it's not time to continue to play the bearish end. When you have all of those things piling up for pointing in the other direction, then you may want to take a little bit proactive measures. So if you have a target delta range, or you have some other conditions as far as how much risk you're willing to take in one direction or the other, then you start curbing that back. So if your max bearish delta was, I'll just, for example, give an easy number, is minus 100 deltas on the SPX, and your range typically is anywhere, obviously, from 0 to, you typically see your deltas in the minus 50 range. You don't wait till it gets to minus 110 or 120 and then chase the adjustment. Maybe you start taking the adjustments at minus 80 and minus 90 delta. So that's one of the applications as well. Also just lightening up risk on one side or the other when you have things point in one direction or the other. There's 1,000 indicators out there, and this is one that I particularly like because I've actually converted the indicator into a backtesting code, run through probably 40 or 50 individual markets from stocks, debt, bond markets, indexes, etc., weekly, daily, intraday time frames, and have found more consistency from the squeeze indicator than from most other indicators. There's just two things: a consistency and also just enough frequency where it's worth following on a more short-term basis. So there's other indicators that are very consistent, but you're only getting signals every few months. So I need something a little bit more frequent than that for rebalancing and protecting market-neutral option positions. So that's just a quick look at what I'm seeing here, and I also use the T indicator, which is one I reprogrammed for a quicker look at multiple time frames. This is just my office is under construction right now, so I'm at a different computer that this is the available data that I have. But I want to get that out there and show, it's been a wild ride, but if we look at some of these indicators that have worked best in the past, we can see how they are helping us navigate and be proactive in defending and following the market. So that's it. We'll have my email address here at the end of the video. Also, you can go to smbtraining.com and navigate to the systems page, and you can sign up for updates and alerts on systems-oriented market analysis. Thanks a lot.